Hello traders, Gary Wagner here. Just about 10 o'clock in Honolulu, 4 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. Second day of October 2015, and this is the daily report for gold and silver, our weekend review. And what a way to end this week, with gold trading up roughly $24 on the day, 1137.83. That is the current print in terms of spot gold. We also had our low of the week come in today, coming in just above 1100 per ounce. When we take a look at our chart, you can absolutely see that we are still closing off on the week, although slightly off on the week, represented by the fact that this market opened roughly at 1146 on Monday and is closing at approximately, because the market is still open and trading, at 1137 or 38, forming this umbrella line or candle. But the real picture is taking a look at the daily chart. Of course, we'll focus on this a little bit more throughout the show, but look at the dynamics of this day. Trading to this intraday low roughly at 1104, and the high in the marketplace itself roughly at 1141. So a tremendous range on the day, a tremendous upside surge as the jobs report comes out with only 142,000 new jobs added. Of course, that well below the estimates of the vast majority of the economists that put out any kind of an estimate on what they expected to see on this jobs report. So as we look at today's activity, the real question we must ask is, have we witnessed some sort of key reversal or dramatic change in the market? And my answer, quite frankly, is it's a little bit too early to tell. Now, there's a couple of things that are absolutely noteworthy when we look at this market. Of course, we talked about throughout the week that we had a major and critical level of support by virtue of harmonics, Fibonacci harmonics, sitting between, call it 1109 and 1112. We have two basic fib retracement. One fib retracement, the longer of these two, takes account of the entire rally from 1071 up to 1171. And the second fib retracement that we have added really starts roughly at, call it just below 1100 up to about 1157. So this rally in here. Now, when we do that, we get a couple of areas in which we get harmonics. One level of harmonics is sitting at 1121. You can see it as a 61% retracement of the short fib retracement and a 50% retracement of the longer of these two studies. The other level, of course, is another fib harmonics, 1111, a 78% retracement, and then a 61% retracement. It's hard to see, but that's right up in here, and that comes in at around 1110. So we had been postulating throughout the week, especially over the last two trading days, meaning Wednesday and Thursday, because we did have equal lows here, whether or not this low would hold. Interestingly enough, this market's been all over the board because the market came in and genuinely created the low of the week, coming in around 1100. In other words, testing this absolute support, this equal low here. It is a higher low. It was able to not only hold this area, but propel itself through one, two, three different, well, one very critical and two minor levels of support in here to close effectively above 1133. That's the 38% retracement of this shorter move. And as I said, currently trading roughly at 1137. So traders, really to give you an indication of the dynamics of this market, I draw your attention to the chart we have just put up. It is a 15-minute simple bar chart. You can absolutely see the spike in the market right in here, but this is really the key when we're looking at the day itself. You can see that this market traded very quietly as we come into the jobs report. Just prior to that report, it comes down, the day begins, and this is where we hit this low, roughly at 1104, 1105. Market trading steady up until the report comes out. When it comes out, you've got, these are 15 minutes again. So you've got the first 15, the half hour into the jobs report, and then you get this tremendous spike, literally from 1110 to above 1132, and it does that in a period of time of about 15 minutes. From there, it did spike to the highs, sold off just a little bit, 35 being a base point that it held, and as I said, currently at 1137. And the last thing that I do want to look at on this very, very short-term chart is that once we had this spike in the market that took the market from 1110 to about 1132, the market really never backed off. Look at this as our baseline. And let me draw a line straight across. What you can see is that following the jobs report being released, the market spikes up, and even as it started to sell off just a little bit following the report, it was able to hold all of these gains, which to me is a very, very strong move. And traders, that brings us to our more long-term view of the market. And the fact of the matter is, on a technical basis, I really believe that we need to see closes at or above really the 1156 mark. Now that is a 61% retracement from the second leg of gold spiking from, call it 700 up to 1900. The 61% retracement comes in at 1157. When we look at the entire move, meaning from about 300 up to 1900, we get a 50% retracement at 1192, which is where we pegged absolute support in the market. So we really need to see effective closes above this area to get extremely bullish. But these are the first signs of life that we have really seen in gold in quite some time. Obviously, the perception is that a rate hike is very unlikely this year. I've heard some analysts pegging March as the earliest you would see any kind of a rate hike. Look, anything is possible, but on a technical basis, we want to see, for a long-term bullish stance, this market move above 1156. Short-term bullish stance, well, we've already determined that it held the 1110 mark, which I have really earmarked as our critical level of support that it needed to hold, even though we had this market on an intraday basis actually trade back down to 1100. How are we going to play this? Well, we need to see follow through on Monday. Follow through on Monday would be significant, and that's going to be the determining factor as to whether we enter this market. Of course, if we see follow through in this market, the best bet would be to initiate long positions. If we see a failure and weakness come into the market, that would represent either sidelining or initiating a short position. My sense is we'll probably see some sort of follow through on Monday, but it's a weekend. Anything can happen. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Have a great weekend. Bye-bye.